Ladies and gentlemen, hello and welcome to today's partner web conference. This is Fast Track Dynamics 365 for Finance and Operations Tech Talk. Today's topic, GST and GTE Part 1, Overview of Features and Roadmap. My name is Janice and I'm going to be your moderator today. We are broadcasting this web conference through Teams live events and the audio can be heard through your PC speakers. Today's web conference is being recorded on behalf of the Microsoft Corporation. Participation in the meeting today does indicate your consent to being included in the meeting recording. Attendees may access the web conference recording via the same registration link that was used to attend today's live broadcast. If you have questions for the presenters or need support, you can turn on the Q&A panel by selecting the question mark icon located in the upper right-hand corner of your screen. We do have presenters standing by to respond to your questions throughout the session. Now, moving on to the presentation. Presenting for us today from Microsoft, we have Senior Program Manager, Prabhat Bhargava, and assisting Prabhat on Q&A, we have Senior PM Lead, Richard Luan. So without any further delay, Prabhat, welcome and thanks for joining us.
Thank you. Thank you, Jesse. Hi, everyone. So today we are covering the GST overview and the GTE new tax engine, which is configurable and take care of the taxes. So I will cover today what we have delivered so far on the GST front and what scenario we are actually taking care. What are the certain features is still under the backlog list, and what is our roadmap to handle the new features. And then I will discuss some of the issue which we are recently facing and how these issues can be handled by the partners or customers at their own their level by making changes in the GTE configurations, right? So first I will explain the GTE because the whole India GST system is based on the GTE. GTE is a global tax engine which was introduced in July 2017, and this is a new tax engine which was different from the earlier old VAT engine, which was a core tax engine. So GTE is actually a configurable localization is there because you can configure your own taxes, you can create your own tax type and things. So it's a very configurable tax engine which allows you to create a tax system as purely flexible tax system to take care of any of your requirement. There we generate a XML format, and the output of the GTE is you generate a XML format which you can import in your system, and you can whatever the changes you made in the configurations, that will be when you import the XML in your system, you can see those changes in the setups and things, and then you can handle the new scenarios. Base configurations we are providing for the India GST by the Microsoft is providing that, and those configurations are available in LCS as a repository. So you can download these configurations, versions wise are available. You can download those versions and can install and take care of your things. You can create so ISV can be created by your own. So you can, if you are working on some specific industry, you can make a configurations based on the specific industry requirement. You can upload these configurations as well on the LCSs so that other can use as well. So this is a very flexible mechanism where the different type of configuration, different industry specific, scenario specific configuration can be created, and you can create those configurations top of Microsoft configurations. Then every time when you import the new configuration, you need not to do each and everything again. You can only make effective the Delta configuration which you have done. So if you have some functionality, if you have added some functionality, if you adopt the new configurations, that only the Delta portion will be updated in the new configuration, and old configuration will stay there. So these are some of the things which make configurable localization system more convenient for the users. Now we come to the capabilities part. So this data-driven localization, because in the tax you have the tax calculation, uh, and you have the tax applicability, and all these things are there. So you can these things you can extend it. Suppose government introduce a green tax tomorrow, you can create a new tax type, green tax, and you can apply it there. If your government introduce a pollution tax, something, so you can go there and create a tax, and it will be effective in a very lesser time. Like it will take only another 1 hour to create you a new tax component there, and you can make it effective. Then extensibility in the tax calculation. Now you know that the tax calculation formula is not on a code base. It is built. It can be configured now. So you can write your own formula, and you need not to write in a code base. So that is a big flexibility to the functional consultant, because they can create, they can do it very faster. So this is very powerful key feature for of the GTE. Then extensibility in accounting, settlement, and reporting. Configurable tax posting and accounting. You can select whether the account should be per registration wise, or for all the registration you should have a consolidated accounting. Everything can be managed here. So you can manage your accounting and posting. You can define the posting. Some in India there are scenarios where the accounting is posted on an exceptional basis. So somewhere you have to post into an interim account or other accounts. So that can be managed by the configuration, because you define the posting for a different scenario, different posting can be defined. So there is no limitation. This is the posting options are unlimited. You can adopt a different posting options. Then you have a configuration settlement rule. Configurable settlement rule. You know that when the GST was introduced, government said that the CGST will be set off against CGST, SGST against SGST will be settled first. But in last February, government make a change, and the government announced that first IGST settlement will happen. So CGST first settled with IGST, and then something is left that will be settled against the CGST. Similarly, SGST will be settled against IGST, and then something is left will be settled against SGST, and IGST will be settled against IGST first, and then it will be settled against the other component. So there is a change in the settlement process, which can be configured in the application quickly, because in that case you have to create a new hierarchy, and you have to activate the new hierarchy where you can define the new set of rules for the taxation. Next is the data flow. So data flow is, you can see on the slide, the tax document. There is a source document, sales order, vendor invoice, that you do a binding with the taxable document. So you have seen the taxable document. Taxable document is a document which reads the data from the source document. So source document have a different table. So taxable document actually reads the data from the source document. Then the accounting rules, or the rules which are defined for the tax applicability, tax calculation, tax accounting, and tax settlement rules are there in the tax document. Based on that, the system calculate the do the tax calculation, and then the tax trans are generated, and those are reported in the inquiries. You can see various reports are generated, and the inquiries, you can see the transactions flows there. So this is the simple data flow. On the right hand upper side, if you see the slide, the first is the India GT is a configurable tax engine, and that we have envisaged. We thought that we will provide a engine which can be configured in a by the customer or by the partners at their own business requirement, and you can do that. But if you see for this platform, we have the two underlying things, GER and GTE. So GER is the reporting tool where you can create your electronic reports. You can generate your electronic report, and we have provided GSTR1, GSTR2, government offline tool. So these are generated from the GER. And top of the GER, you have the GTE. GTE is the engine where you define. Again, this is very domain specific. GTE is domain specific because it calculates the tax, it see the applicability, accounting, and settlement. So all these things will be taken. All the rules which analyze all these four parts are written in the GTE portion. Then you see various building blocks there. Model is the you create different models to read that data, and a model designer again is a UI which fetches the data for the models. Then you have an operational designer, and where again operational designer you have different rules to execute the operations. And then after that, you can see that the configuration life cycle management, because I have already told you the delta customization can be handled here. You need not to do everything again. Only the change which you have made effective can be imported into the application. Every time when you make a change in the configuration, it can be controlled through a versioning. Any upgrade, any change, if you make in the configuration, you can import the new configuration, and you can upgrade your applications. And all configurations are available on the cloud on the LCS repository, where you can download the configuration. Any configuration you can download, and it is available on the cloud. Now GTE architecture, I'm quickly covering it because most of the people knows about it. GTE architecture, first the configuration is available on the cloud. It is on LCS. You can download it, and we have also provided the regulatory configuration services, where you can import the configurations and can make a changes, generate a XML file, and then you can again import these configurations file in your applications. Based on this, you can make tax setups, because these configurations will enable a new setups for you, where you can do some setups. Then you can execute a transaction based on some transaction attributes, and then generate a report for the taxation, and generate a output for the taxes as well. Next slide. So now in this slide actually indicates that India's taxes, how the GST actually distributed across the various transaction type. And if you see, basically the India, three type of transactions are there: purchase, sales, and transfers, stock transfers. Purchase, we have a domestic purchases, we have import scenario of purchases, and it will cover the both goods and service. Sales, we have again sales, we have a domestic sales, and we have an export of goods and services both. And if you see the stock transfer, we have a domestic stock transfers. We are not covering here the international stock transfer scenario, but basically these are the three type of transactions on which the GST works. Because if you see, the GSTR1 is based for sales scenarios, transactions, and GSTR2 is for purchase transactions. Stock transfers transactions are also reported into a respective GSTR1 and 2, where the shipment transactions are reported into a GSTR1, and receiving transactions are displayed in GSTR2. So all these transactions are can be related to goods and can be related to a service. Now there are further classification of these transactions, registered and unregistered. So you know that unregistered, the taxes will be paid by the buyer, but this particular provision is put on hold on 13th October 2017, and this is on hold till September 2019. So till September 2019, unregistered, if you buy from an unregistered vendor, there will be zero tax on those transactions. When you sell unregistered, registered will not matter, but the transaction need to be reported to the government. There is another class of a transactions which government has provided on a purchase side, that is the reverse charge scenario. So normally all transactions of purchase are forward charge scenario, but in case of a reverse charge, the tax is to be borne by the buyer, and then he can claim the input credit as well, and he has to pay to the government the liability as well. So these are the further classification of a domestic type of transactions. Import, we have normal import scenario, but we have a SEZ purchase as well. And when we buy from a SEZ company, the transactions will be treated as similar to the import. There are cases where for a DTA transactions, the system will not treat the as import. There is no need to submit the bill of entry. In those cases, the directly purchase can be executed, and in those cases, the tax will not be go to some authority. It will go to the vendor account. So these are some changes which required in the application to introduce these sort of a behavior. On the sales side, we have an export scenario, we have a SEZ scenario, and we have a deemed export scenario. So again, if you are selling to a customer who is a SEZ customer, it will be treated as similar to the export scenario, where the IGST will be calculated, because all interstate transactions, SEZ transactions. But again, government has provided an option with payment or without payment. You can make a payment with tax, without tax, and that option is available when you are doing a SEZ sale, or if you are doing an export. Even in the export, normally 90% transactions, there will be no tax on the export. But when the government is provided, you can make a payment of taxes at the time of export, but later you can claim a refund. In those scenarios, the accounting entry, different accounting treatment happens, and that you have to take care of that. In deemed export scenario, deemed export only happens with the goods, it never happens with the services. And in those cases, again, government has provided option with payment, without payment option, and you have to take care of those scenarios as well. Domestic stock transfer, intrastate, you know that there will be no GST, but there are exceptional scenario where you are transferring to intrastate transactions, but two different GST registration number. In those cases, the tax is calculated. Interstate transactions, when you do interstate transactions of stock transfers, IGST will be calculated, and all these transactions are related to goods and services. In last few days, we got certain queries regarding the fixed assets transfers as well, where if the transfer is taking place to a same organization, the tax implications are there. Now, in this particular slide, we will discuss about what features are available, because I'm getting a lot of questions from the market. What is covered, what is not covered, or is there any document available, what is available in the localization. So first of all, after this session, we will share you one PDF document which covers the scope. Also, this document will be published shortly, where the complete scope document will be there. So this document will highlight you what features are covered in the application and what is available for the user. Secondly, on the Microsoft Doc, you have a lot of information. actually indicating what features can be executed what features are available, what scenario can be executed for the India localization. So you can refer those documents and it will give you a fair amount of idea what is covered in the localization. So first I start with the direct taxes. Direct taxes, we have end-to-end process where we are covering, but the key feature which we have provided is a threshold. We have provided a single threshold, and we have provided a slab-based threshold. There you have a cumulative threshold, per transaction threshold, per line threshold. All these threshold mechanisms are available, which makes this very flexible, and it can take care of 194 section 194C and other sections requirement. So TDS functionality provide you to generate a 26Q return, and even you file the corrections return as well. So the TDS functionality is end to end. It cover almost all the requirement. And after introduction of a GST, the government has specified that TDS will not be part of the transactions. So that means if you have a gross transaction value, you have to remove the tax part there, and then you have to calculate the GST. Then you have to calculate the TDS. Or when you are calculating the GST, then you have to remove the TDS part. So those things is possible in the application, where you can say that when you are calculating the GST, TDS will not be part of the transaction base. In that case, you can ignore the TDS calculation. There was recently a circular as well where the TCS calculation, GST should not be form part of the TDS calculation, TCS calculation as well. So all these complications government has provided, and through a configuration, all these scenarios are possible. And even for the direct taxes, you can avoid. We have provided in the withholding tax group that you can ignore the GST calculation, GST for the TDS calculation purpose. Again, the GTE, I have covered through a GTE configurable tax engine we have provided, where you can add any tax, any logic, and you can enable the tax functionality for any new change which government made. The basic advantage is earlier when any change was announced, you have to make a change in the code base, but now with the configuration changes, you can do change instantly in a 1 day. So your lead time will be in hours, not in a days, and with the minimum effort, you can enable the functionality, and your dependency on Microsoft to provide any feature is reduced drastically. So we are in the process of simplifying the GTE tool further, so that make it easy to use. This process is currently on. So as you know, the GST is covering basically focus is on outward and inward supply. And what we are covering in the outward supply is the B2B transactions, means registration to registered person transactions. We are covering B2C transactions. So if you see currently today, the B2C transactions are not relevant. Even you need not to calculate any tax. But after 30th of September, it is possible that government asked to calculate the tax on the purchase from an unregistered person, so that the provision can be reintroduced and can be made effective, because it is on hold, it is not removed. Export sales, goods and services are there, and you know that the treatment is different when you export the goods and when you export the services, because when you do the exports of goods, you have to apply for tax calculation, you have to apply the custom exchange rate. But when you export the services, you need not to apply the custom exchange rate, and you have to apply the normal gap rate, and system should take care of both these scenarios. Second difference is for services, there is no bill of entry, shipping bill is required, or bill of export is required. And goods, when you export it, these are the shipping bill is need to be posted for that. So these scenarios are taken care in the application. Export scenario, as I stated you, in normal cases there will be a zero tax, but if some companies are with payment or without payment option, then I will let you know in the end of the session how you can enable these into the configuration to calculate the tax on the export orders. Deem export is again, it is for BTP or electronic hardware technology park. Those entities, when do a transactions with you, those transactions are considered as a deem export. And in deem export, again, the government is provided option to calculate the tax with payment, without payment. Those options are already there. Sales, again, non-GST item, zero rated and exempted item. So if you are using the application in 2017, there was no option to mark the item as export exempted item on the tax information. Tax information, there are actually two important things: tax document and tax information. Tax information is actually attributes on the transactions which you select. So there you have a HSN code, you have a GST registration number, you have the transaction is a exempted item, non-GST item. So that particular checkbox we have brought from the on the transaction itself, where you can, on a particular line on the tax information, you can mark the exempted goods or exempted services. And if you mark that transaction exempted goods and service, system will not calculate the tax, but the transaction will filter out and display in the GSTR report. So that is the change we have made, and I think everybody is aware of. Similarly, non-GST item, and these three type of sales are disclosed in the return separately. If you see the return, those transactions details are not required by the government, but the total sales revenue of different type of items are required by the government. Then reverse charge sales, reverse charge no impact on the tax calculation, but those transactions need to be reported back to the government. So transaction has to be identified. There the reverse charge sales transactions need to be disclosed in the return, and that is identified. Identification is possible in the application. Advance payment, when the advance payment is received by the from the customer, in that case GST calculation takes place. If you see the current law, government has suspended this rule again by till September 2019, but it can be reintroduced again. In that case, the system allow you to calculate the tax on advance payment. In my latest interaction with few partners or customers, I came to know that some of them are not aware that the system can calculate the tax on when we receive the advance payment from the customers. E-commerce sales, only identification is provided, but end-to-end functionality for an e-commerce platform is not available, where you can supply the goods to the customer, you can purchase it from different vendors, and then you have to calculate the GST, TCS as well. We have provided a TCS calculation, but absolute functionality for the e-commerce platform is not available, but partial functionality is currently available in the application. Stock transfer shipment, again interstate, by default system will not calculate any tax on the intrastate transactions. Or interstate transaction system will calculate IGST, but we have come across, and I will also discuss what change you can make if your interstate transactions are there, how you can calculate the tax on intrastate transactions of stock transfer. Then you can do an adjustment. You can post a debit note, customer return, free tax invoice where the tax is enabled. And for service, export of service, you can post a free tax invoice as well. So those features are available where you can post a debit credit note, because normally in GST you cannot reverse the transactions. You have to you have to post the credit and debit note for the transactions. And configurable tax settlement process, you know that we have provided a hierarchy-based settlement process where you can define how the particular tax component will be settled against another component. So, as you know that the government has changed the settlement process. You can define CGST can be set off against IGST, and that rules you can create a multiple set of hierarchies, and you can activate one of the hierarchies there. So this is the feature which is available from the outward supply side. Inward supply side, you have a registered vendor, composition vendor also. Composition vendor is when you buy from a composition vendor, the tax should not compute, and we have provided a checkbox in the customer master under the tax information where you can have the composite vendor scheme selection for the customer. When the vendor is an unregistered vendor, we have again provided in the configuration if your party registration is a blank, and for a particular HSN code or SSE code or a particular or all HSN or SSE code, you can post a reverse charge. So you can define the reverse charge percentage as well, and you can define the various combinations as well, where the system calculate the tax. Even system can take care if there is no tax on unregistered purchases. System will calculate the zero tax there as well. Reverse charge, then you have a GTA, you have a lawyer services, all those services, you have a reverse charge mechanism. So that is also available. You have seen that. And in the settlement process, you can add one more column, GTA column, which you can in the rate setup, and which will enable you to calculate the different tax rate. Even the GTA vendor is an unregistered vendor. In that case, you have to calculate the tax, and that is possible through a configuration to calculate tax for those scenarios as well. Then exempted supply of goods and services, non-GST supply, and then supply through a stock transfer receipt, all are provided in the application. So on the outward side, on the inward side, we are covering almost all type of scenarios. Then we have a depreciation functionality where, if you are aware, in 2013 Companies Act, the government has made changes in the component depreciation, which we have provided. Along with that, the government gave option to the user to calculate the depreciation as per the reducing balance method, and calculate the tax with the and they publish the percentage as well. So current system takes care of component depreciation, where based on the residual life or based on the nature of the remaining life and based on the percentage of depreciation rate, you can create a component and you can define the depreciation rules there. Also, we have covered the single shift, double shift, and triple shift depreciation, where the government has provided a different norms where the depreciation rate will be 100%, 150%, and 200%. So those depreciation rates can be applied if you have a double shift, single shift, and triple shift as well. So this also feature is also available. And the one more important feature which was introduced as by hotfix, and that was when you do a reducing balance calculation, then the residual value should be protected. This was not happening because globally the functionality is for reducing balance method, there will be no residual value. But when the depreciation function changes was made by the Companies Act, the residual value if defined, that will not be considered for the written down value method, and there you have to protect the residual value. So this change was also incorporated. If you have experienced this or if you have not, then maybe you can contact us as well. Depreciation is per Income Tax Act, where the depreciation is calculated in a block of assets, and the important thing is the depreciation rate. If the asset is put to use less than 180 days, the depreciation will be half of the normal defined rate. And group depreciation, and then there is a need to generate a depreciation report as well. So as per the Companies Act, Income Tax Act, you can generate your depreciation report, which is annexure, I think, Schedule 14 Companies Act, which you can generate as well as per the Companies Act. And as per Income Tax Act, the system give you a depreciation schedule report, which indicates block-wise depreciations on the assets. Now we have a GSTR report. GST, we have issued the offline tool, and this is the area where the government has already announced, if you are aware of, then 1st of July, the government is introducing a new system. Government is introducing the system on a trial basis. So far, government has not announced the government has not announced so far the formats, the offline tool format for the Annexure 1 and Annexure 2. So going forward, GSTR 1 will become Annexure 1 and GSTR 2 will become Annexure 2. And then government will also introduce the reconciliation mechanism where the Annexure 2 transactions will be auto-reconciled. Government also made an important announcement. Then by the end of this year, government will introduce the e-invoicing process. And e-invoicing process for all B2B transactions, there is a mandatory condition to generate an invoice in a e-platform, and then these invoices will automatically update on the Annexure 1 and Annexure 2. So we are working closely, and we are watching the government notifications, and we will introduce these new returns when the government will make them mandatory. So from January to October, government is stating that it is a trial period. Government has provided on the link, on the government portal the prototype of the return form, but the actual forms is still awaited there. We are taking care of GSTR 1 offline tool and GSTR 1 and 2. Currently, government has made some changes in the offline tool, and we have not incorporated those changes because we are waiting for government to introduce a new tool, because government has already declared the new offline tool will be available soon. So that's why we are not investing our time in old offline tool to make it compliant completely. Then we have a retail as well. Retail is also integrated and localized as well, where the intrastate and interstate transactions can be handled. Normal customer order, return order, price inclusive and exclusive scenario, discount and offer, exempted replenishment, and then uniform invoice number on the POS receipt. Some of the key features for the retail which we have provided, and which you can see, and I think probably you have used it. So retail segment is also localized. A few features are under consideration, like customer GST number capturing through a POS. So those important features are under consideration and under pipeline as well. Then the project transactions are also localized. Hour journal, fees journal, expense journal, item journal. All these journals are localized and made compliant with the GST. Project PO, project SO, project quotation, and project invoicing. All forms of mode of transactions, we have provided a tax information tab as well as the tax document to see the tax calculations and tax postings. Then this is the area where the few features are still in the backlog or out of a scope list, and it is important you should know those things. One is input service distribution. This feature, we have received so many queries in the last few days, but we will not deliver this feature. I will discuss, if the time allows, we will discuss some possibilities to handle this. But currently, this feature is not under plan as well. It is in the backlog list, but it is not under any sort of a plan to deliver in near future. Then we have a generation of a auto reconciliation report of GSTR2 and GSTR2A. As I stated you, government with the new tool, with the new return format system, government is providing a reconciliation process where the reconciliation will happen on the government side as well. So we are analyzing it, and we will make sure that a user have a, capabilities to do a reconciliation either through a government process or through some GSP process. Uh, so we are keeping eye on this particular change. Then we have our GST return 3B. 3B return is a temporary return which government is extending every 3 months, and I think this will be extended till September 2019. So Form 3B is not provided. We got many queries on this particular 3B availability, but this will not be delivered because this is a temporary form which can be made redundant by the government at any time. Similarly, GSTR2 offline tool, GSTR2 actually currently on hold. Government is not asking to file GSTR2 return. Government has also published the offline tool, but when the government is not, government has put this particular feature on hold, we are not delivering the GSTR2 as well. Then annual return 9, 9A, 9B, and 9C. These returns, if you are filing a return through a government process or even through a GSP, you can generate your 9 and 9A, 9B, 9C return. But because this area is fluctuating as well, after the new GST returns process, there is a possibility then the government will simplify the annual return process as well, where the reconciliation and filing of a return process will also be simplified. So therefore, we have put this feature on. Currently, annual return feature is on hold as well. It is not in any plan to deliver. GSTR return 4, 5, 5A, 6, 7, 8. All these returns, where the return for a composition vendor, return for GST TDS, return for ISD, these features we have no plan to deliver because based on the number of users of these areas are limited. E-wave integration with the GSP, that is the one of the key asks which we are getting from the market, and also the offline tool. So as I stated you, the e-wave bill, currently we have provided option to capture the e-wave bill number. We are exploring on this area how we can make it more convenient for the user by through some GSP or through some working on the offline tool. Currently, no action is taken on this, but we are looking into this area to make it more comfortable for the users. Expense management integration with the GTE. This is complete module integration with the GST, so that is out of scope. We are not doing it, but we have a. If any user want to do it, then we can guide them how they can do that. But possibly this sort of integration has to be done by the partner. Tax accounting on payment basis. Again, this is specific to a very, very limited scenarios like interest, with the industries who are dealing in the interest payments on the late payment, other things. So this scenario is have a limited usage. So currently we are not considering this. We have EXIM export incentive schemes. Again, EXIM, we are not doing any export incentive schemes. We have done this EXIM area in AX 2012 R3, but now we are not working on these incentive schemes because these incentive schemes are also going for a change, and we are not supporting the incentive scheme going forward. Outsource and subcontracting, again, this is not localized and it is not in our plan as well. Cost accounting integration also out of scope. Payroll integration, which we have not provided, and as you know, the India have a lot of rules and regulations, a lot of law applicable. We are not doing the payroll as well. Then GTE integration with the advanced warehousing management, where it is impacting the basically the stock transfer scenario. So this area is also still not on our priority list. GTE integration with enterprise portal, in the AS, like Indian accounting standards, You know that the Indian accounting standards, all accounting standards changed, and it is now called Ind AS, and there are 32, I think, accounting standards are there. So we are not even taking care of these accounting standards, because most of the accounting standards are similar to the IFRS, and system core application take care of most of the IFRS standards. So this we are not taking care. Computation of a taxable income of assessee. This is also one of the area where the people want to calculate the tax from taxable income for income tax purpose from the application. This is also not in scope. Credit note against stock transfer. That is also where the transfer is executing between a registered location to unregistered location, or where the receiving locations is not allowed to claim any input credit. So there the challenges are there. We have noted this particular point. We are exploring this, but currently no plan to deliver this feature as well. Then the slide roadmap, which we would like to discuss with you. The roadmap is in next releases or future releases. We have the GST Annexure 1 and Annexure 2. It's again dependent on the when the government provide the offline tool for Annexure 1 and Annexure 2. So based on that, we will work and deliver the Annexure 1 and Annexure 2. It seems that Annexure 1 will be the GSTR 1 and Annexure 2 will be GSTR 2. And also the GSP like Clear Tax or Velocis, they have confirmed that the existing format should able to generate a return as per the new format. There should not be any problem. So we are working, and we will ensure that when the government made this return mandatory, our customers are compliant to that. Then we have going to release HSN code and SEC code on the procurement category. That will come soon, and available in the next version. Offline tool for the new return, which I stated you, once available, we will deliver them. Shipping bill for the project invoice, that will be released in the in next release as well. Financial dimension linked to the inventory dimension side. Currently, core application only provide a one dimension financial dimension to attach to the site. If we will deliver this feature, but if somebody has to have more dimensions, then the existing functionality will prevail there. But if somebody is using the one financial dimension which core has provided, they can use we will release this change as well. Adjustment of tax in custom currency. So we will providing this change where the system will calculate the tax directly in accounting currency, and you can make the changes in the bill of entry in the accounting currency as well. Proportionate allocation of charges on sales line. This is on the sales side. The government has made it clear that if you are selling the material of a different tax rate, then if some charges are defined which is applicable on the complete sales order, then the charge will allocate to the lines based on proportionate basis, and the respective tax rate of the item will be applicable on the charge as well. So this functionality is actually dependent on the allocation feature, which is available on the purchase side. It is not available on the sales side. We have a dependency on the core. We are collaborating with the core team, and once this allocation feature is addressed, we will be able to address the remaining requirement for the India tax perspective. Separate GST reference number for free tax invoice and stock transfer number. Actually, we failed to get the legal reference why these separate number has to be provided, but the feedback from the partner side is that during the assessment process, authority asked for a separate number sequence for the stock transfers. So we will, in the next release, we will deliver this feature, but we have not find any legal reference for these things. Then validation of a GST with the state code and PAN. This is a requirement which we are getting. Then if you are entering the GST and number, then the system should validate the state code. If we are selecting the city or Bangalore, and in that case, the GST registration number should start with the 27. So if it is not happening like this, then our system should validate the state code or even a PAN format, so that the user can do a corrections when they are entering the GSTN number. So these are some of the key tentative feature plan which we will deliver in coming months. Then I will discuss quickly some of the features uh, where we are getting continuous escalations or continuous queries or requests for collaborations. So first is export of goods, services with payment of tax, without payment of tax, because configuration currently calculate by default no tax on the export transactions, but the companies, customers have scenarios where they need to calculate the tax and get a refund. In this requirement, I will take you to the configuration application where you can make a changes. Similarly, for supply of SEZ, again there are constraints where you have to make first you have to identify the SEZ. SEZ means both the supplier and the receiver are based in India, uh, and the tax will be calculated with payment and without payment option is also there. And again, the tax, whatever the tax is paid, is refundable as well. So accounting is different and the treatment is different, because even the companies are within the supplier and receiver, both are in the same state, the tax will be IGST. So that is the behavior which required for export and SEZ. And if the time allows, I will discuss quickly on those two scenarios. One is bank charges, which we recently received from 2-3 customers, where the bank charges on customer payment required. I'm not sure, because the vendor payment bank charges is a common scenario, which we have already provided, but we also received a few escalations where the customers are looking bank charges on customer payment, where the accounting will be the charges will go to the recoverable, and the customer account will hit by that. So for that, you have to make a small change in your configuration. One important change, which maybe I think the interpretation of a law is different. IGST, GST, TDS, where the interstate transaction, the IGST, TDS should be computed. The government actually, when the law was introduced, mentioned that the no deduction tax is required when the location of supplier and a place of supply is different from the state of registration of a recipient. But latest few we got few clarifications where the IGST TDS again is required to be calculated. I would like to explain it here that GST TDS has to be calculated on the net value. So if you have multiple sales but one sales return, you have to reduce the return from the sales transactions, and then you have to calculate the GST TDS. That's why this functionality is also only provided on the payment side, because when you are making a payment, it is easier to you to know what tax should be deducted. And that's why the functionality, both TDS and TCS on the payment side, it is not on the invoice side. If you have the invoice case, you have to extend the configuration accordingly. So I will also let you know how you can make a GST TDS a change in the configuration. Then GST on intra-state stock transfers. By default, system do not calculate any tax on intra-state transactions. If you need a stock transfer, then you have to remove the condition in the configuration, and you have to mark each and every line as exempt. Where we are also looking to provide some ease to provide a exempt checkbox on the header level, so that once you mark all the lines will be exempt, and in that case, system will not calculate CGST and SGST if you have marked the exempt. And by default, if you have not exempt, then the system will calculate CGST even for intrastate transactions. GST on reverse charge, they're unregistered 0, and there again you have to use the configuration properly to calculate the tax accordingly. One of the scenario which is very common where I got the continuous lot of mails, and that is the fixed assets transfers, how the fixed assets transfer to be executed. Currently, fixed assets is not available in the application, and even the application do not provide an option where you are transferring the fixed assets to another location and where the financial transactions are happening and where you can calculate the tax. So current workaround is you have to use the transfer of fixed assets module functionality of transfer of fixed assets. You can transfer the fixed assets by using the dimensions and that you one location to another location you can make a shift of the assets. Then you have to raise the free text invoice where you have to create a one dummy customer, and dummy customer will also map to a dummy vendor where the same customer will be a vendor, and both the customer and vendor will have a same main account, ledger account. So you have to post a free tax invoice for that transaction, and then you have to apply the GST there on the free tax invoice. Tax will calculate on a transfer. Then you have to come back and you have to post a journal with the selecting the same customer as a vendor and the fixed assets control account, because fixed assets you have already transferred, so you will have the fixed assets transfer control account that you will debit and credit. And when you post the journal, your dummy account will nullify, your fixed assets control account will nullify, and you have a tax and you have a transfers of location of assets will move from one location to another location. This is a little lengthy workaround, but this is the current only one option if you wanted to apply the fixed assets on the transfer transaction. Then we have a ISD. ISD we are not supporting, we have clarified it, but we have got a lot of escalations how it can be handled. And as per my understanding, it can be handled only through a tax journal, which we have provided in the application. So in the tax journal, what you can do, you can debit, you can create a branch transfer account, branch transfer control account or something like that, and you can debit the branch's account and credit the credit account, because when you buy services at the head office, you will post the tax into a recoverable account. So those recoverable account has to be nullified when you are transferring the credit to your branches. So you debit your branch account and credit your whatever the input credit you have claimed, and this can be done through a tax journal. And another tax journal you have to post in the branches where they will debit the head office and credit the respective tax account. And please note, if you are crediting like your CGST and SGST is there, but when your branches are situated in different state, for them it will be IGST. So they will post IGST recoverable in their books. Another requirement which is associated and which you may be thinking that you have to post an invoice there. When you do a distribution, you have to post an invoice, and for that in the tax journal you have to create an invoice template where you can generate an invoice as well. We will also look in the future for that if we can provide a template for invoice, but you have to provide a template which you can generate when you are doing a distribution, posting a tax journal there. So this is some workaround which you can apply for. And I quickly, I think you take you to the application side. So as I stated you for export transactions, basically you need to identify whether the transaction is an export transaction. Then you have to identify whether the transaction is you have to see whether the with payment or without payment. And third attribute, you have to see the accounting entry, because tax will go to the refundable account and go to the payable account. So these things you have to take care there. So one thing which you have to do, you have to go to the applicability here, and in the applicability norms, you have to provide an export order, and as well as you have to define the SEZ option as well. FCZ I have not defined, but you can define the SEZ option, and with you say with payment yes. So if your scenario could be tax payable, you will calculate for export scenario, and you say that with payment will be yes here. Again, for the respective component, you can define the lookup. I'm saying that my party is a export order. I will say, because CGST will never calculate on export order, and SEZ will also not calculate, because SEZ transactions are considered as an import or export. So again, there will be no tax. But if you go to the IGST here, you see that for IGST, I say import yes, and I'm saying SEZ yes. So for IGST will be applicable when the transaction is interstate, when transaction is an import order, when transaction is a SEZ, and when transaction is an export order. So all these conditions, you calculate the SEZ, you calculate the tax amount here. And then I will also say with payment and without payment. If I say SEZ, I can say here yes as well, right? Because SEZ party, I will select here yes. And also I will say with the SEZ, if I say export order, I will say with payment yes. So first change, I have to make a applicability point of view, so that the system with payment option export order mark calculate the IGST for you. And the second change which you have to make for the posting, and in the postings you have to add SEZ, you have to add sales invoice for SEZ, and there you have to define a posting profile, IGST refundable to tax payable. And similar thing you have to do for export as well. Maybe export. So export, if you define the export posting profile here, you can define the IGST, and you have to put a condition here. The export order is yes, with IGST payment is yes. If both are yes, then system will calculate the tax and post into a refundable account and credit to a accrual account. Or because we have provided a accrual mechanism, if your order in some different currency, then first tax will go to the accrual account, and then from accrual account it is posted to a refundable account or a recoverable account. So this you can define here. So this is for SEZ and export scenario. Another issue which was related to a bank charges. So bank charges, you have seen we have provided for bank charges for customer side, but bank charges for if you are looking for a bank charges for a vendor side, but if you are looking for a bank charges for customer side, then you have to add one more option here. You have to create a bank charges for customer, you have to create a bank charges for vendor, and in that case, when you add the bank charges, I think I have done this for here. So bank charges for vendor, and you have a bank charges for customer. In that case, the tax will go to the recoverable account and credit to customer account. But if the bank charges for vendor, the tax goes to recoverable account and credit to bank account. So you have to make this change, because you will charge, your customer will add the bank charges plus tax amount and make you a payment. If that is not the scenario, then you will change the profile here. But if you are getting a payment through a check from the customer, and you are also the customer is also providing you bank charges plus tax amount, in that case you will define the posting like this, and you will put a condition here, and your condition will be your customer payment. It will not be a vendor payment. You will have a customer payment here, and based on that you will write your conditions as well. So you can see here the general ledger, the transaction type is a customer payment, and if you define the SSE code, system will calculate the tax for customer payment scenario as well. Now we have another scenario which you can follow, and that is the IGST TDS. And IGST TDS, it is not there. So what you have to do, you have to go here, add a new component, IGST TDS. You have to define the base amount, rate, and tax amount. It will be similar to the other two components there. Only the posting difference will be there. If you see the IGST tax amount, if you go to the here, first of all, you have to see the lookup of this. It is applicable on similar to what other components are doing. Tax calculation will be the base amount, which will be the line base amount. Here, posting will be GST TCS recoverable. I think it will be a TDS recoverable account, and you will credit to the bank account. So you will create a new account here, which is IGST recoverable account, TDS recoverable account. You will select here, and you will put the condition here, because tax will be calculated price inclusive. Means if any GST is there, that will be reduced from the gross amount, and the tax will be calculated. So if you add these posting and with this condition, you will be able to calculate the GST TDS amount. One more thing which we noticed that the people are finding it difficult for to calculate the reverse charge mechanism. And for the reverse charge, I think user can define you have to utilize this table in a better way, because there you can add one more column, GTE commercial vendor. You can define the various combinations here as well. So if you see the party registration, if you see here the party registration, you can say the party registration is a blank. Means the vendor is your vendor, particular vendor. You can select the particular vendor as well, and you say that your particular vendor is this particular vendor, and you can define the tax direction here. So if you define the tax direction, sales tax payable or receivable, you say party registration is blank, my sales tax direction is this, and my rate will be 100. So I'm not doing here, but if I go to my tax setups, there I can choose the vendor account. I can say the party registration is blank. So what I do, I go to the setup only and show you. So you can see here the combination. You can see here, I say my party registration, I can select the vendor as well. My party registration is blank. My tax direction is receivable. My tax rate is 0. Again, I can say for the same code or for a different code, I can say my party registration is blank. My direction is a sales tax payable. I can say sales tax payable, because payable scenario you will have a tax there, irrespective whether the vendor is a taxable or whether the party is unregistered or a registered, tax will be there. So there you can define you can utilize this table, and you can see for both payable and receivable, for vendor and a customer, you can define a different rate combination. And in this way, you can manage. If you say that your vendor is a GTA vendor, not registered, means party registration is blank, but still the tax rate should be 10%. So that will be applicable. It will differentiate an unregistered vendor, which is a normal vendor, from the GTA vendor. So normally GTA vendor could be registered, but there are cases where the GTA vendors are not registered. Still, you have to pay the taxes. So this is the table which you can utilize, because I got many queries or escalation on this area, where people are asking how to, my GTA is non-registered, or still I have to calculate the tax, or my party is unregistered, or my party is registered, how I can calculate the tax in those cases. So you have to use this table to calculate your taxes. Right? So I think probably time is over now. So, but still many more scenarios which we can discuss. We will see possibility of the next session where we can discuss and execute some of your scenarios in the application. So thank you very much for your time, and I hand over to Jesse on this.
All right, thank you, Prabhat. All right, ladies and gentlemen, I'd like to take a brief moment here and bring your attention to a link that I posted in the Q&A panel. And that's a link to a short survey for this web conference. We ask that you please take a moment before logging out to access it. We hope that you found today's information helpful, and if you enjoyed today's web conference, have feedback on how we can provide you with a better event, or you'd like to submit topics for future web conferences, this is your chance to let us know. We do appreciate the time you take to do this, and thank you for your support. And that is going to conclude today's web conference. The recording and a copy of the presentation deck will be made available within 5 business days. Please look for an email from Learning Media within that will include details on that in the coming days. I'd like to extend a big thank you to our presenters, Prabhat and Richard, and thank you, audience, for logging in and joining us today.